What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 24th of 2024. Well, folks, I hope you're all having a fantastic day wherever you are, because in today's video, we've got some imperative things to discuss when it comes to Bitcoin and crypto, as Bitcoin and the broader crypto space continue to flush down in the red here over the last week. Since we last spoke here, Bitcoin is down a couple $1,000s and is looking steadfast to head towards the 200-day moving average. I want to try to talk about why this is happening here, the really dire warning signs we're seeing with the Bitcoin ETF that need to be talked about, and outside of that as well, what this is going to mean for altcoins as a whole and where we could start to find potential value opportunities. Plus, we'll be talking about the macro and so much more. If you enjoyed this video, consider dropping a like, and let's go ahead and kick off the rambling. All right, guys, we got to talk about Bitcoin first and foremost here. I think Bitcoin is a great gauge here for the broader risk-on sentiment in crypto as a whole, but also in asset markets. And we've seen really since back here in Q1 when we really had a lot of the juice in the markets here, we've been stalling for more than 3 months. This is, again, the longest period of time we spent at our previous all-time high. I'm going to keep echoing that because until that is really broken, we get back to the upside here. This is just further proof that we are likely experiencing a longer term top here, temporary top in markets, even if Bitcoin has the ability to go higher here in the long run. And the reason why is because this range clearly has proven by now that it is a range of distribution where sell side pressure is starting to be equal, if not outweigh buy side pressure. And I'm going to explain the reason why I know this is the case. The reason not only is clear and evident within price. For one, we have creeped steadily below the 100-day moving average yet again, like back here in early May, and the difference in response again by breaking below that 100-day, whereas last time we immediately saw a quick swift green recovery, we have spent over 72 hours at a minimum below the 100-day moving average with no serious buyers in sight, which leads me to believe that we're going to the next best level, not only a retest of the prior lows back in May, but also the 200-day moving average, which is just nesting right there. But the question again remains, why is this happening here, right? Isn't the ETF going to save Bitcoin? Isn't the ETF going to drive prices higher? Anytime when prices dip, isn't the ETF going to come in and save it? Well, take a look at the global ETF inflows. It doesn't matter if you're looking specifically at the US, which I think has been definitely the biggest set of buyers by and large and the biggest capital markets for Bitcoins. But if you want to take a look at the real metric here, the big global metric, we can take a look at global Bitcoin ETF. Doesn't really matter what you're looking at here, the amount of Bitcoin held in spot Bitcoin ETFs for the US or global holdings, you will see we've had another weekly outflow. This is not good, guys. We've seen a net move of around 8,000 Bitcoin, give or take, from the Bitcoin ETFs. Yet again, an inability to get inflows on a global scale. Now, this was supposed to be, again, the infinite money glitch that so many bulls had talked about, right? And I'm not here to say, again, guys, that Bitcoin can't go up. I'm not here to be a perma bear by any means. But if there's not inflows into the ETF, and we've already got on the original spot market probably much more sellers, people who mined Bitcoin at 50 Bitcoin blocks back a decade ago, who made just millions upon millions of dollars on their laptop or their computer or early stage mining rigs, they're the ones selling, and we need institutions to buy here. That's the whole narrative that people have been hoping for this supposed bull cycle, which is that the institutions are going to buy our bags. Right? Well, as we've talked about here in this channel for some time, we do not believe the ETF is some infinite money glitch that's going to drive Bitcoin up and to the right. It is a very clear sign. This price action we've been seeing is a clear sign that cycle analysis is probably broken, that there will no longer be a traditional 4-year cycle pattern. The expanding cycle theory already broke in the last cycle. And as the halving events get weaker and weaker, we are going to be ever more dependent on new inflows, new participants, new liquidity coming into the market to actually drive Bitcoin's price higher from this price point. Now, I have no doubt that if we get down to, say, the 50K range, or if we were to go lower, right, over a longer term correction, I have no doubt you'll see some of those ETF inflows pick up. Smart money might come in and buy the dip, and perhaps Bitcoin can go to 6 figures one day. But the idea that you see models proposed by people like Plan B saying that Bitcoin is going to be at $500,000 by some time in 2025, I mean, I think it's just completely out the wazoo. Right? this is where we have to come back to a sense of sanity. We have to be grounded. We can't be overly bearish, but we also can't be overly optimistic and bullish. And I think the price action clearly shows us here that we are going to have either a period of sideways price action between this upper $50,000 range to this $72,000 range as a channel for some time, or we will expect probably some further correction here in the near term. I think that both scenarios are probable ones. And during this window of time, what it is going to mean, not just for Bitcoin, but altcoins, is definitely something of concern, especially altcoins here, guys. Take a look. Since we really closed our positions back here in early April, we basically sold the top in altcoins. We made phenomenal returns on Memecoins during that period of time, made some multiples on those trades. We can see very clearly that we saw stagnation here in the trend. We saw an inability for the 21-day to continue that accelerated move that it had been holding for a long period of time. The broader trend was slowing. We closed out of positions, and then we had the first initial flush. And afterwards, we regrouped and waited to see what would happen. And what we saw was inconsistencies in the trend, resistance at the 21-day many times. The 100-day, again, chopping in with the 21-day, not a good look here. An inability for price to really escape a lot of that downside that previously had happened in mid to early April. And what did we see here? We saw a continued retest of that 200-day. And unlike those prior times where there was the strong bounce, we had a breakdown. Multiple days of chop here at the 200-day and a huge snap down here in price with no ability for buyers to come in here and save things. I mean, just look, 2 very weak green days. Compare that to the buy side pressure that came into the 200-day back here in April and May. Huge surges where market cap went from 226 billion to around 280 billion within a matter of around 48 to 72 hours. Now, this time around, we came down to the lows of 210, came up here to around 239 billion and faded those gains. Didn't even have a daily close at that range. So this to me does not look bullish by any means. And we are coming right back down to those lows. And as we have talked about for the past few months here, guys, we believe that a 50% clean cut correction, big psychological level, $180 billion from the previous $360 billion high, around $370 billion high here back in March, is the low we expect. It is the prior range of support back here, as well as prior resistance back in November. It's a major psychological level considering a 50% correction, roughly speaking, the 200 week coming in. And while I'm not saying you need to wait absolutely for that level or that you need to go all in at that level and it can't get worse than that, of course it can. The main point I want to say here is that we're starting to get close to the range of potential opportunity. We're getting to the range here where there might be favorable risk reward setups here, getting into some of those narratives. And while it might take another couple days, another couple weeks here, I would say to start having your liquidity ready on standby. And the great thing about it here is that while we accept that this could get worse, that we could snap below the 200 week, that altcoins may never come back up here to this range, right? In the same way, we're struggling to break the prior all-time highs. It may very well be, guys, if you really are being honest about it, and I think if we're all just sitting down, realistically looking at things, considering global liquidity, right? The surge of new participants in crypto, new money coming in, and the status of real fundamental value in the altcoin space, there's a clear case to be made that it will be very difficult for altcoins to get back to where they were back here in November 2021 and to be able to actually accelerate far beyond those levels. Think about the status of DeFi. Innovation is dead in DeFi. There is so many things, and there are all the things we talked about in 2023, but now that we're at a much higher valuation range, I understand we might have gotten that wrong during that period of time, and we accepted that here in October when we started to see a break above the 200 week, and we started to flip our tune. We started talking about Bitcoin-related infrastructure, talked about DePIN and AI plays, and we made some incredible calls, and even meme coins as well. We were really on the spot with some of these narratives. The problem is now we are at a much higher valuation range than where we were back here during that bear market window in late 2022 and early 2023. So again, I think there's a much more favorable entry here. Good risk reward setup. We can really watch to see how price reacts at that 200 weeks, start building some entries, start accumulating. But at the same time, we can also wait, and I think do the smarter thing, which is like wait for some signs of momentum. Wait to get above that 21-day moving average at a much lower price range. I think that that's really where you're going to find the value. It's not about catching a falling knife. It's about waiting for us to, again, start using the 21-day as a gauge for momentum. I don't want to really hold positions through this chop here. I'm not going to really make much money there. I make money when we start to see acceleration above the 21 day and we sustain above that 21 day and we're continuing to climb and make weekly higher candles, higher lows, higher highs, signifying that the bulls are here, the momentum is here, it's time to get on the bandwagon and trade the strong narratives. That's the game, guys. Right now, other coin dominance, it's just bleeding here. It's not looking good. And I understand a lot of people say, this is again why you come back to just sticking with Bitcoin long term. But guys, in Q1 of 2024, the returns I was able to make on altcoins, right? Getting it at the right time and getting in low, selling high, taking profits, not falling in love with my positions, not setting la land expectations like a lot of people tell you of 10, 20, 30, 40, 50 X's within a matter of a week or two, right? I'm not selling you guys that kind of stuff, right? I was able to make more than hodling Bitcoin from the lows, right? On some of those trades. So it's important to understand here that altcoins are really where the opportunity is. Bitcoin is really dead weight when it comes to the kind of returns that it used to provide in the past. Not saying that Bitcoin isn't a great asset, not to say that Bitcoin can't continue to climb higher long term, but I don't think it's going to make anywhere near the multiples it made in prior cycles, because I think cycle theory at this point is really dead. And I think a great example of this is we can see what's going on. The Ether or Ethereum ETFs are expected to launch on July 2nd. This is the Bloomberg analyst expectation. They were pretty solid on with the bets around the Bitcoin ETF. There's a ton of S1 filings going on right now. And I think that above all, we're seeing very clearly that the market has a consensus here that the ETH ETF is coming out. And just look at what's happening here. We've just been fading from 3,900 down to 3,300 here. We're barely teetering on that 100 day. And again, every time we had popped up here, right, you see a wick on the candle here, right? The close was much higher from the 100 day and started to, again, move up higher over the following 48 hours. Now we're coming down here and it's just, we got to see how things play out, but it's just weak. 21 day acting as resistance. The 21 day should be acting as support here in anticipation of the ETF. That's not a good look, guys. And I don't mean to be a perma bear, guys. I don't mean to be too negative. Right? You guys can see we make trades when there's momentum in the market. We can make phenomenal returns. The time to buy ETH is when you're clearing through prior highs, you're well above the 21 day, and you just show that clear momentum. And so long as it holds above that 21 day, you just ride the wave, let it do its thing. Now, this is looking top heavy. And when you take it out here to the weekly, the bi-weekly chart here, oof. Again, like Bitcoin and like altcoins, and actually similar to altcoins versus Bitcoin, it's looking worse than Bitcoin. We weren't able to even come to new all-time highs. And I really don't think it's going to be very easy to get back up to like $4,800, $5,000 for Ethereum, right? If this is the anticipation going into the Ethereum ETF, it tells me that the market knows one thing, and that there's not going to be a lot of ETF inflows versus the potential sell side pressure from all of the major long-term ETH holders and stakers who are again thinking in that narrative that the institutions are going to buy their bags. Institutions don't buy tops. They sell to retail investors at tops. So my main point here is that I don't think the ETF is going to have as much of a positive effect as people are expecting. And you could again think that history is just going to repeat here, but Ethereum is not the same crypto as Bitcoin. It does not have the same institutional recognition. Ethereum at the end of the day is not as big of a project as Bitcoin, but beyond all those things, you can't just launch a million ETFs and think that everything is going to benefit equally as Bitcoin. Bitcoin was the first horse to the race here. And we saw that while it did provide some good price benefit, there's no guarantee that that's going to happen here for Ethereum. And I would say above all, guys, even if we can watch the ETF inflows, while that may provide a kind of positive cushion for price, we need to, at the end of the day, see whether or not Ethereum can get above that 21 day, right? If it can't do that, it's probably going to slowly bleed, similar to how Bitcoin is doing. Right? So this is a very important dynamic to keep in mind. This is just for all of the altcoins who are watching, guys. You can see Render here down almost 50% from its prior all-time highs here against Bitcoin. We can see that it looks like it's very clearly going to continue on this trend here. We see stacks as well below the 200-week. A lot of people FOMO'd in on this candle here. Resistance yet again played out the 200-day like back here in the 100-day. Faded down here. We've been patiently waiting in cash. We are waiting to see signs of sideways consolidation and ability to find accumulators, find support in price, and be able to start actually trading higher above that 21 day. And until that really happens, I'm not really interested in these coins. And it just shows here throughout history an inability to hold above that 21 day, right? To have breakouts and then come down and make that 21 day support, right? That's your cue to really go long. It's the difference between these flash rallies that get you FOMO and then inevitably lead you losing money, whereby instead in this case, we can wait for the initial move, initial surge, make prior resistance of the past support, solidify it, and start trending higher. That's what I'm looking for here. I want to see that 21 days starting to come in. And I know a lot of people are also curious about my thoughts on meme coins. Well, I do believe that meme coins could still be very well one of the narratives of this cycle. I mean, take a look at, if you guys were like caught in meme coins right now, there's a few plays here over the last 7 days, a few small micro caps that are doing well. But take a look at the broader market here, guys. An absolute sea of red. MAGA is down 40%. Dog with hat down 37%. I mean, you just scroll down the list here. There's some big names. Dog or Runes here in this case, down 30%. And we just go down the list here. Total bloodbath here in a lot of names. Floki, $1.4 billion crypto down 20%. Bonk down 20%. I'm just focusing here on the large ones. Book a Meme down 17%. It's not me being a perma bear, guys. This was well overdue. There were so many signs for the past few months, and I'm not here to belittle anyone. If you guys were on that other side of the trade and you come here to this channel for a different opinion, I want to give my hats off to you. I appreciate that you guys give me time to speak, and I don't mean this with any ill intention. I'm not here to say I told you so or anything. I certainly missed the first part of 2023, and as I tell you guys in this channel, I'm going to let you know when I get things right, but I'm also going to let you know when I get things wrong. But the reason why I think we got this so right here is because at the end of the day, there were clear signs in price, and if you don't listen to it, if you don't listen to what price is telling you, what those moving averages are telling you, and how price is interacting with those moving averages, you will get left in the dust and you'll be losing a lot of those gains that you made, some of those life-changing returns. And I don't want to see you guys lose those. I don't want to see anyone, not take chips off the table. There will always be people who do it. I'd rather you guys who are coming to this channel, I want to help you guys as much as I can here. Again, I can't give you direct financial advice, but I'm just here to kind of give you some guidance here. And seeing the weakness here in some of these altcoin pairs, which again, were trending greatly, which is why we were talking about them. Great opportunities to make money. But when you start seeing those inconsistencies in the trend, the moving averages tell you everything here. The sideways price action from February to April on the 21 day, those yellow green lines, I told you all you need to know. It's not about timing the absolute bottom or absolute top. It's about knowing when to ride on the momentum and get out. And now we're struggling at the 200 week. Yikes. That's quite counter to the support we were making back here in December 2023. Till that changes, till we start getting above that 21 day, not really interested. Now, outside of the narratives we talked about, I think the kind of medium risk, medium reward setups we talked about, DePIN or decentralized physical infrastructure networks and AI, that is, I think, going to be a solid narrative in the event of an altcoin rebound. You've got Bitcoin related infrastructure. But you've also got the time-tested narrative of DeFi as well as long-term layer one infrastructure competitors to the Ethereum network and other major chains like Solana. And I think that this is something that you guys need to keep on your radar here as we go into the next few months, into this period of time where we're looking for plays to accumulate when no one wants to buy altcoins, when everyone's capitulating. One of those plays that I think you guys need to keep on your radar is one of our partners here in this channel, that's AlpZero. Now, we talked a lot about AlpZero, but there is a big announcement that came out back a couple days ago, guys, and that's the announcement of AlpZero's EVM testnet with ZK Privacy. Now, this is essentially going to be a component of the AlpZero network that has an EVM compatible framework. So think about in the same way that Binance Smart Chain, the same way that Arbitrum or Optimism or other L2s or compatible L1s that allow you to utilize Ethereum-based smart contracts, similar to Uniswap or Compound or Aave, all the existing kind of well-known DeFi applications. You will be able to deploy similar applications within the AlpZero ecosystem. But beyond that, the reason why this is so big and why it's not just another EVM fork is that they have built in the application for zero-knowledge technology, which is going to allow for private transactions, privacy as a service, where essentially developers can do everything as they normally do in the traditional EVM framework, which is familiar for all Solidity developers in traditional applications, but being able to have privacy baked in at the core. This is a really big deal. We have yet to see a real true private EVM environment, and this is very big. As I tweeted out on my Twitter, or my X profile, I talked about the fact that this is going to be a very big deal for a lot of enterprise blockchain solutions and traditional finance to really get into the crypto space that have not been able to do so because of GDPR compliance and a whole range of other need for privacy. I mean, just think about, if you're a bank, for example, and you're offering DeFi related services, you can't expose your clients' balances on chain, or at least who they are. So you need to have degrees of privacy. And that's not something that is totally cypherpunk or out of the reach. That's actually what enterprises are going to need in order to get into this space. So this is a very big announcement for Allo0. I want to give hats off to the team. If you guys haven't been diving into Allo0, I definitely recommend you guys go into the website, read into some of the docs, take a dive into the ecosystem, and just keep an eye on it, because it's a very early stage project here. But it's one in which has been built for the last couple of years. And what I mean by early stage is that it hasn't had its S-curve rate of adoption yet. And I think for me, that's where the opportunity really lies. You don't want to get in when the crowd's all excited about it. You want to get in when you see the early signs of momentum, see the strong fundamentals, and you have clear technological developments that are going to put it at the forefront of other protocols. I would also say as well to keep an eye on one of our other partners, AngelBlock, as well. Many of you guys know AngelBlock is one of my favorite fundraising platforms in the crypto space, and they are not only partnered in a significant way with Allo0. So if you're interested in Allo0 and you want to capture some of those early stage projects, I think many of them are going to be coming to the AngelBlock ecosystem over the long term. So keep an eye on that as well. Make sure you guys bookmark AngelBlock, that you get plugged into the platform, try it out, get a feel for it, see what projects are on there. But there's already existing rounds that are going on in a whole range of different narratives. And the narrative of real world assets. They did a raise recently with Lingo, one of the biggest real world asset projects in the world. They had a full-on raise here. It closed out about $50,000. But beyond that as well, they also have their raise for Squatify, which is launching tomorrow. So don't miss on that. Dive into the details if you guys are interested to learn about it. Squatify is this kind of social-fi or eToro styled investing platform in the DeFi space, where you can do essentially copy trading or social trading and be able to get exposure towards a whole range of assets and trade alongside some large players. The big thing above all, though, that I really like is, again, it's tapping into the base ecosystem. So again, in the same case that they did with a lot of the previous projects that they've had on AngelBlock, where they basically tap into a lot of the emerging ecosystems, whether they be L1s or L2s or emerging narratives, as we saw with Lingo, with its focus on real-world assets. AngelBlock is multifaceted, and I think that this is a benefit not only for those who want to partake in some of the raises on the platform, irrespective of no matter how the token's going to do at the end of the day, no one really knows, but you're getting in early at these projects at the levels that VCs would usually get in, so you have a much better asymmetric risk-reward setup in the long term. But beyond all of that as well, you're getting exposure to a whole range of different narratives here and different types of projects. So it's good about a diversity from an investor perspective, but also for the Thol token, getting early stage access to all these projects and a variety of different emerging narratives, I think is going to be beneficial for Thol long term, the main native token or utility token on the platform. So just keep an eye on all this, guys. I think this is where some of the opportunity is. It's not just about buying existing coins on the market that are at nice discounts and already strong narratives. It's about finding those emerging projects that are going to come out in that secondary wave during a potential altcoin cycle, and some of which could really stick around and be really solid projects. Last but not least here, I want to go ahead talk a little bit about equity markets here in closing, guys. Not too much to talk about here, but I do have some interesting charts to show you. As we've talked about time and time again, I'm going to beat it like a dead horse until we really get some solidified close above it. We saw on the market close on Thursday a tap at that $5,500 level, $5,500 point level. We talked about the past couple of weeks that we get this kind of, I think, final surge up to this range, and we did get that. And now we are testing up against that range here, guys. And I would really say to be cautious at this time when it comes to going long on stocks. There's a couple reasons for that. One, obviously this line of resistance has played out since the roaring 20s, before probably any of us were alive. So 95 years since this has played out here. If we do have anyone in the Data Dash audience who is over 95 years and was born during this period of time in the Great Depression, I would love to get some comments down below. That would be really cool if we've got some people. I know we got some people who are in their 70s, 80s watching the Data Dash channel. You guys are keeping sharp, keeping in tune with crypto markets and the broader macrosphere. I really appreciate that. And I appreciate you putting up with my rambling as well. But beyond all of that, not only is that significant resistance, guys, but if you look at the past, really 80 years here, excuse me, I'm getting my math wrong here, last 64 years of data that we have, going back here to the late 50s, early 60s. This is the S&P 500 divided by the money supply, M2SL, or M2 money stock, right? And I think that this just puts us in a good perspective here, right? The last time we were this overbought against the money supply was back during 1998 to 1999. It's back during the euphoric stages of the dot-com bubble. Now, I'm not here to say that this guarantees that we're at the top by any means. It could very well, as we've seen throughout history, go a couple more percentage points from here, about 25% against the money supply. Right? But we could also see what we've seen many times when we get up in this range, which is a significant correction. We could have a flash sale of 33%. We could have a nice healthy moderate correction like the ones we saw here of 25% or more. Right? Last few times we got up into this range, it wasn't very pretty. And maybe it's different now with AI. Maybe we do continue here for the next month or so. But I think the risk reward setup is not very favorable here, considering the long-term resistance that could be at play, how overbought we are historically over the last 60 plus years. And if we take a look at global liquidity, I think this gives us an even clearer picture here from the last couple of years, the last 6 years, right? 6 years since early 2018, every single time we came up against this line of ascending resistance, which we're just about, give or take, 3 to 5% away from now, we were followed by around 13, 20, 25, 35% corrections. Doesn't mean you have to be all doom and gloom here, that, you know, the number doesn't go up into the right long term. Of course, it generally does. But there are periods of time where it is not favorable to do that, and you will get chopped up. Same kind of expansions here, right? They're getting longer, generally speaking, each time, but we're still in alignment with coming up with one of those tops here very soon. And it may be that we don't get the major flush down right away, but we could have a couple months of stalling price action, but there's not much returns. And it might be more favorable to remain in cash and wait for those buy the dip opportunities. Above all, guys, we are on the upper band here versus history. And to lose sight of that, and to ignore the brutal gap and crap we saw here. Sorry for my language, it's just what the markets call it. When you have a big gap up here, one of the leading stocks wasn't able to hold it and just faded over the next 48 hours. From 140 down here to 124 at the lows. These are some warning signs that we're getting to bubble cap territory. Nvidia being the largest company in the world against Apple and Microsoft. I'm optimistic about Nvidia. I think Nvidia is a cool company. You know, don't have much negative to say about their technology. I've used Nvidia graphics cards for a long time. But guys, take a look at history here. We are extended above the line of resistance here on the upper range. Wouldn't be playing around with this. I wouldn't be taking too much risk at these levels. I'd wait for a healthy pullback. And throughout history, I can tell you guys, chasing euphoria has hurt me more than waiting for a correction to a better, lower level. Because we trade with swing setups, we trade exponential sectors. And when we have the right size to go in, we will outpace passive investing. We do phenomenally well, and we can really capture those upward swings. Because we do the research, we remain patient, and we wait for the right signs to strike. Which so many traders, unfortunately, don't do. Not to say I don't make mistakes along the way, but overall, the mistakes I've learned from the past have helped me to benefit greatly when it comes to making moves in the future. I've learned those painful mistakes, and I hope I can pass those on to you guys here on this channel. I rambled on to get them out here today, guys. If you enjoyed this video, consider dropping a like. Definitely check out Russ's videos on Wednesday and Friday. I'm actually going to be doing a video on Wednesday. I'm filling in for Russ this week. We covered some really interesting dynamics potentially in the altcoin sector, some emerging industries as well that I'm keeping an eye on, maybe even in equities. So I wanted to maybe cover some interesting things on that. But again, in general, you guys should definitely check out his uploads as well. Check out our partners down below, Angel Block as well as Zero. If you guys enjoyed this video, again, consider dropping a like, and I hope you guys have a fantastic rest of your day. I'll see you guys right back here on Wednesday at 6 a.m. Eastern Standard Time. Take care, everyone.